Hey everyone, how's it going? Welcome back to the Stock Market Outlook video brought to you by DeepView. As always, we're going to run through the major indexes and some key stocks as well and talk about the overall health of the market as it stands today. So dive right in. Let's go ahead and start with a chart of the QQQ, the NASDAQ 100 ETF. And as always, if you do enjoy my analysis at any time during this video, please go ahead and leave a like down below. It helps me out immensely. And of course, subscribe if you haven't yet and want to see more videos just like this one every single week. So taking a look at this chart, you can see we're trending nicely above all the moving averages here, but we're definitely getting stretched once again from the 21 EMA, the 50 SMA, as well as the 200 SMA now. And if we take a look at how far we are from that 550 SMA, we're about 8.5%, 9%. So definitely historically stretched. I consider anything above 6% getting up there. We reached that around this point, and then we had a pullback, and then obviously the very strong end to last week, driven by the mega caps as well as the semi names, which we'll cover later on in this video. So, for me, once a market gets stretched like this, there's kind of two main ways it can correct. It can have a very sharp correction where it corrects through price, and then we can kind of just drift sideways or a little bit lower, and it more corrects through time. Obviously, the second one is preferable. I'd love to see, the market go sideways while the growth names kind of consolidate, especially the semi names, and maybe we even see rotation into the small caps. The IWO, as we'll basically go through later on, is definitely weaker than the QQ and SPY, which are more mega cap dominated. So I'd love to see some rotation into that area and kind of see breadth increase as a whole as well. But this is definitely strong action, but getting a little bit too much so. And I wouldn't be surprised to see, a week sideways, 2 weeks sideways, and even maybe a sharp correction. So we'll see what happens, but be ready for anything and manage risk as always. So that is the QQQ, very strong action. And actually going over to a guppy chart, I do want to point this out. For those of you who aren't familiar with what a guppy chart is, it basically plots different period moving averages, shorter term in red, longer term in blue, and it's a great way to quickly identify, what the trend is as of this moment. And you can see in basically late January, the red crossed over the longer term moving averages, starting a strong uptrend. Here we consolidated, didn't break below those blue moving averages, and we continue to trend nicely here on the daily chart. You can see how this can help protect you when the market, crosses the red down through the blue. That's a sign to limit exposure, get out. And you can see some of the rallies did have kind of false positives, which is always going to happen with any trend following system. But for the most part, this basically keeps you on the right side of that trend. And you can see way back in 2020 when it crossed over. So if you're ever looking for a really quick and easy visual way to identify the trend, the GMMA charts are a great way to do that. And you can use them on both a daily as well as over on a weekly chart. If you're more, longer term focused, this can be a great way as well to stick with that longer term trend. So with that, let's go back to the daily chart, switch back over to this view here, and now move on to the SPY. So overall, this is definitely a lot weaker than the QQQ. You can see we're above all the moving averages, but nowhere near as extended. But we are right at a key level where we're just above this prior pivot where we were rejected down. This recovered, and now we've recovered that pivot. So, what be very, constructive would be a drift sideways for a few days and then strong confirmation to the upside. But I definitely don't want to see, a quick failed breakout. That would tell me that, we maybe need to revisit the 21 EMA or even that 50 SMA. And we'll just have to wait and see what happens. But I'd love to see a definitive move higher and a nice trend on this index as well, not just have the tech names being, the strongest group only. I love to see, greater participation from multiple groups. So as the SPY, moving on to the Russell 2000, first of all, as a whole, this is a lot weaker. You can see we're rejected at that 200 SMA, which is declining. And we did retake those moving averages on Thursday and Friday, but we're still just kind of within this base, trying to form out a bottom here. The growth names are a little bit stronger. There's the IWO, Russell 2000 Growth Index. It's above those moving averages, but still kind of forming out this base here. And like I said, I'd love to see some rotation and participation from this index, showing that it's not just the mega cap stocks kind of driving everything, that, stuff is winding out, and there'd be a lot more opportunities than just those tech semi names, which have been super, super strong. So that's pretty much it for those three main indexes or four main indexes that I'd like to take a look at. Because the semi names have been so fantastic, let's take a look at SMH, which is the Semiconductor ETF. You can see a nice buyable spot here, popping back through the 21 EMA, 50 SMA, breaking through this horizontal line as well. Then we did have a pretty drastic pullback into the 21 EMA, and then, due to earnings, due to a lot of different factors, this just took off this day and this day. Obviously, we've got NVIDIA taking off, as well as many other names. MRVL on Friday. AMD is strong as well. And the whole group really is just taking off due to different fundamental factors. We've got AI theme. We've got chips as a whole just being a theme in of itself. And this is pretty much straight off the bottom and very strong, but also short-term extended. So anything can happen. It would be completely normal for this to correct all the way down to 137 or even cut below this over the next few weeks. And I'd love to see a correction through price rather than, or actually through time rather than price if possible. So a drift sideways would be a lot more preferable than a sharp correction to the downside. But very strong action as this really moves up the right-hand side of this base. And going back over to that group of stocks, let's take a look at some individual names. First, taking a look at NVIDIA. This obviously was the leader here, very strong since this wedge pop on this day, retaking the moving averages, getting back through the 200-day moving average. Beautiful trend, respect for the 21 EMA multiple times. And now we've got this earnings gap into new all-time highs and basically a consolidation inside day here on this past Friday. So where this goes from here, I don't know. The momentum is upwards, but obviously it's going to take a little bit to consolidate this type of move. It is in all-time highs now, which means all the shorts are underwater. Everybody who owns the stock is green, so that's the best possible scenario for a nice trend. So I'm definitely keeping this close on my radar. And this is, the leader. This is what's kind of driving everything. And let's open up the earnings and earnings estimates. You can see really strong growth is expected. These are the earnings estimates here in gray. These are the reported earnings here in black. And you can see, 100% growth in earnings for the next 2 quarters is anticipated. Really nice revenue growth as well, acceleration because of this blue bar here. That shows it's supposed to accelerate these past 3 quarters. And, a lot of factors are behind this move, and it's extremely, extremely strong. So that is NVIDIA. Definitely one to keep on your radar. And moving on, we've got Tesla. This is kind of the mega cap that hasn't really participated too much yet. Definitely constructive action. Failed breakdown here. Now it's forming out a shallow base here after the strong move up. It's got that 200-day moving average to contend with, so this could be a potential pivot. Ideally, we get a little bit of a sideways move first and then a pop through that. That would allow you to manage risk at that higher low or at these 50, these confluence of moving averages. If they kind of drift back up, you can manage risk right below those. That would be the ideal scenario, but this could easily pop through right here and make its way towards the top of this base. It still has a lot of overhead supply to deal with. This is one of the weaker of the mega caps recently, but nevertheless, decent action over the past 2-3 weeks or so. Moving on, we've got Meta, beautiful trend above the 21 EMA. It really had a nice turnaround through this HVC, popping through that, then a 4B minus setup, and then just a nice trend above that rising 21 EMA. And you can see the strength recently. Super strong trend. Not super extended for the moving averages just yet. You can see it got a little bit ahead of itself here as well as here, where we did have that resulting pullback after that, which provides opportunities. So watch for pullbacks into that 21 EMA, or even if it does base longer, that 50 SMA. MSFT, Microsoft, nice trend above the 21 EMA, 50 SMA. AI is definitely a driver here as well. And this is a little bit more extended than Meta, especially the last 2 days, gap and go, but very strong action as it basically makes its way back towards those previous all-time highs in a really strong trend above a rising 21, 50, and 200 SMA. If you've got rising moving averages beneath you, it's pretty much a very strong trend. Moving on, we've got Google, nice action as well. Also not super extended, but it had gotten a little bit stretched from that 21 EMA, 50 SMA, and then it consolidated pretty much last week. So this could be actionable through these highs here. You can see it's contending with potential resistance at this level, and we'll just have to wait and see what happens. I love it to rest a little bit for 1-2 weeks, let that 21 EMA catch up to price as it did right here, and then sort out another breakout through a consolidation. Apple, you can see a nice trend above that 21 EMA. Nice action late last week off that 21 EMA and just in a nice trend above a rising 21, 50, and 200 SMA. And that's pretty much it. We've got SQQQ down here as well, which is in a solid downtrend, maybe getting a little bit stretched from those moving averages to the downside, but it's pretty much the opposite of the QQQ, which we already talked about, how it is getting a little bit stretched here. So, keep that in mind. Individual stocks are going to act on their own merit, but, there are definitely some that are more correlated to the index. So with that, let's talk through a few of the ETFs that kind of represent different sectors and areas. This is a new thing that I'll be doing, so let me know your thoughts on this kind of segment. But overall, I've got this column here, price percent change the current week. So it gives you a sense of what was strongest last week. So FNGU is a leveraged version of the FANG, as well as a few other names here. Super strong. SMH also leading. Tech in general is very strong. The cyber and hack ETFs basically represent cybersecurity names. So we've got CrowdStrike, Zscaler, some of those, and they were actually very strong last week. So maybe an area to look into. Hack as well, similar. Genomics from the ARK funds. Robotics and artificial intelligence. This is making its way up here. So this is kind of a nice, easy way to identify strength in the market, is looking at these ETFs. And I've also got these sectors representing industry groups as well as themes and overall sectors. And you can see the weakest were materials. We've got healthcare as well. We've got consumer staples and utilities. So, the non-traditional growth areas are weak, which is kind of a good sign, right? But maybe they're getting a little bit stretched to the downside as well. So just a different way to identify rotation instead of not only just looking at individual names, but looking at these areas as well. So overall, my take is, going back to the market ETFs and bringing up the QQQ, definitely getting a little bit stretched, but, also showing a lot of strength and power. And the semi names are definitely short-term extended at this moment. But the type of moves that we're seeing, indicate that it could just be the start of a longer move. So definitely keep them on your radar. Watch for pullbacks, low risk entries. I love for them to go sideways for 2-3 weeks, set up consolidations, 3 weeks tight, pullbacks into the 21 EMA, and basically present different opportunities. And don't buy just because the stock is, going up every day. That's an easy, recipe for disaster, where it just pulls back on a natural reaction, stops you out, and then takes off. That was an early mistake I made early on in my trading career, is I would buy extended. So don't buy just because the stock is moving up because of FOMO and everybody else seems to be making money. Wait for your spots, be patient, execute well. That's the way to make money over time. So let me know your thoughts on the market down below. What do you think about these moves in the semi names? What do you think about breadth? All of that. And yeah, I'd love to hear your thoughts down below. So definitely leave a comment. If you're watching all the way up to this point, thank you so much. Make sure you leave a like down below, subscribe if you're new to the channel, and I'll see you guys in future videos. Take care.